Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, well, we're going to recap the Friday trading action. We're going to preview the big week in earnings, and we're going to talk about what's moving this morning. That includes Snap. They did have their expiration over the weekend. MO moved big on Friday on some potential FDA news down the road. We have the Scripps merger. Looks like it's happening, and some major ratings to discuss as well. Our guest will be at 8:35. That's Kirk Du Plessis. He is the founder and head trader at Option Alpha. Joel, how are we doing this morning in the S&Ps?
Nice range here in the S&P futures, up 3 points at 73.25. Pre-market high at 74.75. That's just above your all-time closing high of 74 even. All-time high in the SPOOs, that was hit on Thursday at 24.80.50. On the downside, looking safe above that pre-market low of 66.25. Friday's low at 61.50. Crude doing its best to get over $50. We had a 50.06 print. We're down. It's down or unchanged here at 49.69. So a big psychological level here in the crude market. Haven't quite had the 8-day rally yet, but we've been up 5 out of the last 6 trading sessions. Gold and silver are pretty much mixed here. The D's gold trading at 1274.60. That would be down 60 cents. And silver up a dime at 16.80. Good morning, Dennis. Welcome to Wall Street on this Monday morning.
Not much good about it. I threw my back out over the weekend and can barely move, so it's going to be an interesting day for me. I'm leaning in my chair right now. Man, it's tough to get old here, Joel. I don't even know how I threw it out. You just wake up wrong, and it's like my whole back doesn't move. So anyway, so
Speak
it's
for
going to be an
yourself.
interesting day here.
Speak for yourself getting old. I swam 2,000 meters straight this morning. So
You're a machine, though. You're a machine. You'd like defy all physics.
all right.
I'm telling you, man, we got to set up the Joel versus the shark.
Yeah.
I think you could beat that great white.
I would swim against a real one. It wouldn't be a fake one. But, Dennis, we got a lot of trading action to recap from Friday. Also, we got look forward to this week. We got a big earnings day on Tuesday. Not, any huge names. I mean, you do have, obviously, Apple on Tuesday and Tesla on Wednesday. But a lot of names, but those would be the 2 dominant reports. Do you want to look at Tobacco stocks? I mean, I don't want to overuse the pun getting smoked, but what a day on
It's a good one, though.
Spencer, can you give us the news first?
They got smoked. You actually made me laugh out loud on that one. And that's obviously probably where I just didn't see it yet.
Well,
give us the news. What happened on Friday with Emma? Because I've never seen a move like that in my life.
Yeah, the FDA are going to try to cut nicotine in cigarettes to non-addictive levels, was the news there. Now, this isn't something that would happen tomorrow, happen a few years from now, but that they're looking for it, and Mo got hit hard.
That is the biggest move I've ever seen in Mo. I've never seen anything like that. Intraday, too. So this is a conservative defensive stock. Typically moves around 50 cents a day, maybe $1 here, $1 there. Very conservative stock, though. It did move the day before because it had earnings. It actually moved. Well, everybody who bought it on that good earnings report got smoked. I'll use your pun there too, Joel. Because that stock, that news came out, it was at 74. An hour later, it was 60. It went not even an hour later, 20 minutes later, it went from 74 to 60. That was a pure crash in MO. Came back, obviously bounced quite at, hung up between 66 and 68 the rest of the day. Is leaking here again this morning. It's down another 2 points at 65.01. I mean, I've never seen MO get hit that hard. Philip Morris also got hit. PI also getting hit. Those bad though because those are British stocks, remember. So I'm not sure if the regulation, if this FDA, if this is going to, apply over there for ETI and PM, or if this is just going to be an MO. But holy cow, that MO to go down 14 points like that, that's just It smoked everyone. I was in it.
No circuit breakers on this. I mean, I'm looking at that. Isn't that a percentage move that would?
It's supposed to be every 10, but it probably didn't. Maybe it didn't do like it's got to do it within 5-minute period, right?
Okay.
Every 5 starts to adjust. So it was like okay, let's go maybe wide enough that it just didn't trip. You know what I mean?
Yeah. Okay.
Because you were over the course of 40 minutes. So if it moves for like 10% in 5 minutes, so maybe we never had a 10% move in 5 minutes, even though that chart looks straight down.
All right. Long-term perspective would be this is not supposed to kick in for a while. So if you're panicking and hitting the sell button now, it's going to be. I think it's going to be 2020, but don't quote me on that. So that's one concern. The other concern is, man, when you have a stock go down like this and it did recover, man, it's just going to be fighting its way on the. I'll look at the close from Friday, 66.94, and I'll let Wall Street decide whether or not it's a value above that. If it ever goes into super rally mode again, that 74 level was a rock, but we are now, $7-8 away from there. Coming back on the downside, I don't know. It's going to take a lot to take out that 61 low, so I would just look at your half and whole numbers for support and levels going on down. After it hit that 60-10, the next bracket didn't get much under 62. But tough call on this one. And then Philip Morris. What would you do if you owned Philip Morris? You saw it go down to under 110 and comes back up to 118.
I'd be selling.
Yep, 118.51. So you got a decision here to make. But also, pair traders absolutely destroyed on this one, Dennis.
Killed. I mean, when you see Philip Morris flat actually at the close of the day and MO trading down while it would have closed down, I mean, anybody who had that paired up is just absolutely murdered. It's been a tough go for the pairs traders for a while. I mean, pairs seem to blow out. There is opportunity still with that stat arb strategy, but in cases like this, we got on wrong, man, it's going to get hurt. I guess we got on the right way. You're going to make some money though, but. PM, so PM goes from 118 down to under 110, comes all the way back. I mean, if I saw that trading action, I just came home Friday night, I saw that this thing went under 109, I'd be coming in and saying, hey, get me out of my Philip Morris. I don't want to take chances here. This might apply to us too. And that's why it's not surprising that we're down $1.50 here on PM this morning as well. But holy cow, this was really beat up. Ace is saying the audio is choppy. I don't know if that's if anybody else is hearing that, but let us know if you're hearing a choppy audio. We'll try to fix it there. If it's just Ace, then it might be on your end, Ace. So let us know if the audio is choppy. But that's a big move for those three stocks. And MO, that's just an incredible move. Jumping over to let's go merger land here. We do have the deal. It's official. Scripps Networks SNI getting bought by Discovery DISCA. $90 a share is the takeout price. Stock not much of a premium up here this morning because it was already all baked in. I mean, this thing we knew for a while. This is the worst kept secret on the street. So when the rumors started, the stock was down at 67. So they had actually even said before today that 90 was likely going to be the price. So it's official here now. And the risk arbs are putting a 2.5-point discount on SNI.
All right, and you see it. Yeah, that is a pretty good discount. And what's Discovery? DISCA.
Yeah, but there's two. There actually is three of them now, I believe. I don't know why they have so many stocks, these media companies. Well, DISCB they used to have, but that doesn't even trade much. And then there's like DISC. What's the other one? There's three of them now. It might be DISCK.
What's the most liquid one? The DISCA?
DISCA, I think.
Yeah, this has been in a trading range here. Let's see if they hit the acquirer. You do have a double top from Friday and Thursday, just under 27, 26.87. That was one low. 26.86, so that's your risk on the upside. 25.5. You've had 1, 2, 3, 4 lows there since June. So they're your early levels in Discover Communications.
I'm not sure if this is on my because I'm having a problem with my headset here today. So maybe the audio is bad on my end too. But other people are saying it's okay. So anyways, the show must go on. We'll continue going here. That's a little M&A talk here. We're staying away from earnings here just because we're going to be doing earnings all week, and there's only a couple here this morning. So let's go over to Snap, SNAP. That is trading down 41 cents. Well, Spencer, you were right here. That lockup expiration, you've been talking about this for a week. And if you were selling this ahead of it, you're making money. If you're selling it on the actual expiration, you're making money here too. Because the stock continues to go lower here. The expiration is officially over. There's going to be some more sellers, it looks like, in the market.
All right, down 39 cents here. We made the all-time closing low at 13 and a quarter. Trading below the all-time low, 13.20. That was a double bottom from Thursday and Friday. Your pre-market low, boom, right there as well. Someone making the stand at 13.20, up at 13.40. If you are playing this one, and, you get an open here at 13.20, 13.30, and it doesn't go right back down to, keep going, $13. I don't know. There could be a little bit of a head fake here, but there's your major support in Snap. I guess the only support in Snap here, overcut in half since it hit the IPO high off I think it was the second day or first day at 29.44.
Jumping over to your big mover of the day, Ace was talking about this morning. I mean, this thing was halted all day on Friday. Finally opened up Friday night. DVAX is what I'm talking about, which is Dynavax Technologies. They had some drug news here, Spencer, and it must have been good because the stock's up 88% this morning.
The FDA advisory panel voted 11-1 in support of approval for Dynavax's Hep B vaccine. So yes, it was very good. Actually, it was 12-1. Excuse me, 12-1.
So this was chopping around a couple days before too. So we did not trade it all Friday during the day. It halted the entire day. It was halted on Thursday night, and then obviously here we are Friday, or maybe it was halted Friday. It didn't trade at all until Friday night. Opened up I think around 15 Friday night, and then chopped around a lot. And obviously now it's 17.50 here. So it's been a wild child here, at least in the after hours pre-market. We have not seen regular trading action or regular session trading action here on the stock yet, though.
$2.50 off that print of $20 even. Nice whole number there if you want to play that. Like I said, $2.40 off that, so we'll be keeping 20 as a target on the upside. This stock hasn't traded near $20 in quite some time here. You had the 23.62 high back in April of 2016, so you can find some intermediate levels there. But up 89% here at 17.5. I don't know. That high for the day could be in there at $20. We'll see if anybody wants to take this profit here on the stock nearly doubling overnight.
So FireEye here. There's a lot of individual stock news just out of the blue, and FireEye is trading down 2.5%. If you're wondering why, there's claims that there's a hack here into FireEye this morning, and isn't that interesting when you get the cybersecurity company is supposed to stop the hacks, gets hacked?
That's not good.
Kind of a little ironic.
No official news on that, but we do have it down trading 28 cents at 15 even. I'll give you your pre-market low at 14.50. If you've been looking to buy this thing on the pullback, this could be your opportunity. Had a nice run up over 16. That is ending now. 14.50. I see 3-4 lows in that area. We did get below it in the pre-market. So looking for a target on the downside, 14.50 could be an area. Coming back on the upside to fill the gap from yesterday, you need to get up to 15.20, and now to get flat on the day, 15.28.
Yeah, so this is not official yet, that hack. It's just a possible data breach. I believe FireEye is looking into it, so we'll have to, when Benzinga Pro or when Benzinga gets a statement from them, or
I don't think it's a hack at FireEye. I think it's a hack at one of their clients, which is not quite. Well, again, unconfirmed.
Okay.
Unconfirmed. This is just what I'm seeing on Twitter, but there's a difference there. But we're looking.
Okay, so no confirmed news here, but right now we're just waiting, and that's why the stock is trading down in the pre-market. So that is your catalyst here this morning. Jumping over here, just a couple other stocks I want to talk about. My list, Tesla, obviously, getting the big pop here this morning. News again over the weekend, Spencer. We got some more cars getting delivered, do we?
Well, they had their big party. Were you?
And the party, too.
Were you watching the party?
No. Did you watch it?
No. I had better things to do than watch Elon's Tesla party at 11 p.m. Eastern time or whatever it was. No, but they had their big delivery party. So they have delivered the first Model 3s. Congratulations to those people.
Oh, and what was it? Like 30? How many cars?
Yeah, it's like 30. It was like 30 cars.
So we had a party because we delivered 30 cars. Crazy.
Yeah, something like that.
You know what, Musk? I don't know. Like, the guy's a genius, obviously, but he's kind of crazy, too, isn't he? Like, what was that tweet storm he had last week about this, train or something that's going to get approval? It's going to go from New York to Washington. And what was all... And he was saying he's got verbal approval, but then all the, everybody's coming out saying, what is he talking about? Like, all the government officials are saying, there's no approval on anything like this. Like, this kind of came out of the blue.
Well, yeah, it was an underground train from New York to Philly and DC, like a triangle there. But it won't be complete in my lifetime, so I don't care.
Well, but he was saying, and the thing was, he tweeted out that that this is verbal, basically a go, and everybody didn't know what he's talking.
No.
And then he was coming back and trying to back off a little bit. I mean, his Twitter account. We talk about Trump's Twitter account, but the Musk Twitter account's pretty market moving and pretty active there too.
Yeah, well, first of all, he said he got verbal approval. That's not including funding or anything else. So it's obviously years away. But tell me the difference between genius and crazy. There really isn't.
Well, what was that study? It's right there. Genius, but right on the edge. These guys are so smart that they're almost crazy.
Yeah.
Anyways, that's I guess it's not saying you're buying. When you buy Tesla, you're buying his brain.
Yeah.
When his brain gets a little crazy, I can get a little bit concerned.
Dennis, I'm gonna pause you for a second. Maybe fix your headphone port because you're going in and out on me. But Joel, give me some technicals.
All right, Tesla got a nice pop right off that initial reaction to the open at 4 a.m. He hit 343.89. Kind of been a slow leak here, 338.50. I'm going to go to the dailies here, and I'm going to give significance just below that pre-market high. Because you had a couple lows last week, and they were in the 340 handle. 347.50 was the high of the move, and then a couple highs at 345.5, 345.60. So just above that, that's been the high of the rebounds here since you got near $300. So let's keep an eye. That's it's a more volatile stock. So triple top up there from 45.60 to 47.5. Let's call the middle of that 346.60. Do we got Dennis back here?
I'm here. It's just a matter of my headset. I think I'm losing my headset here because it's going in and out. I think that might have been the audio troubles before too. I might have to go and obviously buy a new headset if there's something happening here. A loose wire, maybe. Something's happening anyways this morning.
One comment on Tesla here, and I don't know. I haven't done a lot of research in this. I was talking to a buddy out of the weekend. So they did the Model S, right? And the Model X, right? And the Model 3, okay? Did anybody, and supposedly they're doing a Model E, right? So what those three letters stand for?
Well, come on.
I swear, buddy told me that.
Who cares?
I mean, that's just a pretty interesting model names that they picked there.
Let's keep it simple at Tesla.
All right, let's get it back
Model
to
F, Model G, Model Z.
No,
let's get it back to the stocks.
Dennis. You're missing it. All right, I'll explain to you.
Let's get it back. Let's get it back to the stocks. What else?
Right over my head. I'm tired. I've had a long weekend. My back hurts.
What else is on our list? We got Twitter and the single digits.
Ratings. They want to talk ratings here. We got Buy Apple, and that's not to say Buy Apple, but that's his handle in the chat. Is talking about the Facebook downgrade from Pivotal here to Sell. Okay, Pivotal. Is that one of our buddies there at Pivotal?
No.
Who's the analyst there? Who's the analyst that's downgrading this to Sell? Anyways, Facebook is shrugging this off because it's only down 20 cents.
Our analyst is Brian Weiser is the guy downgrading this today. He's
okay.
Not been on the show.
Downgrade to Sell here. Stock's only down 20 cents. They're obviously shrugging it off. I mean, this stock has been wild here last couple of days. Had earnings a couple of days ago, obviously, and then wild again on Friday. Close still not that far off the all-time high here, though. Just that we set 2 days ago, so 3 points. Only down 20 cents. Shrugging this one off, Joel.
What was his rationale for that? Did we?
That's what I'm wondering.
Well, I haven't read the note, so
I don't know either. I mean, Barron says it's going to 200. In a heartbeat. No. Yeah.
Barron said it was going to 15, and that was the bottom. So when did they say it was going to 200?
Over the weekend. over the weekend.
Come on.
Yeah.
Okay. Well, now I really want to ring the register in Facebook. The Barons call. They haven't been good in Facebook. That article that came out when they said it was $22 and they said it was going to 15. The stock went down to like 19 or 20, and that was a low. And obviously we've been straight up ever since. Now they're saying it's 200. So they've completely, if you were listening to Barons on this one, you sold at 15 and you're buying at 200.
All right, Facebook here, as you said, just very quiet here, not reacting to that. We'll just give you the daily levels here, and the daily high, the high of the move, the all-time high, 175.49. You had your all-time closing high on Friday at 172.45, and I think I saw some pre-market prints the day of the report, even higher than that at 179.22. But for simplicity's sake, really one only number, keep an eye on 172.45. That's your all-time closing high in Facebook.
There's a lot of upgrades and downgrades. Celgene up to buy at Argus. Coach downgraded at Jefferies. American Airlines up at Cowen. MO gets upgraded at RBC, but obviously RBC isn't that influential. And secondly, there's just so much other news on MO that's going to take precedence there. GoPro upgraded at Morgan Stanley. Baidu gets a couple upgrades, upgrading to Mira Macquarie, analyst chasing price there. Where do you want to go? Any technicals on these ones, Joe? I just spit you out like 5.
Yeah, I know. You just rattled them off here. Celgene, that stock is relatively up near all-time highs, trading up at 135.05. Is that it? The all-time high, 139.01. Major support just at the lows from Friday at the 132.5, 133 level. Let me see if I can give you an all-time closing high in Celgene. All-time closing high, 137.84. So we'll keep an eye on that. If we go into rally mode, 139. No, you had one other print. You had a 140.72, but 139 even's been the recent high. And someone is making a stand there. You've had 3 highs right at 139 in 3 out of the last 5 sessions.
Talk GoPro GPRO stock gets upgraded here this morning at Morgan Stanley. Kind of a little bottom forming here in GoPro. I mean, you've had a lot of lows just below $8 here. Did I lose audio again?
No, we gotcha.
Anyways, it looked like I lost. So okay, just below $8. Now you get the upgrade, pushes it up to 835. The only thing is you got those pesky highs up at 850 too. So it's kind of stuck between 8 and 850.
It's just this is just a chart I look at and I just have absolutely no interest in here.
Yeah, it's GoPro
$8
too.
Yeah, I mean, look how long it's. I mean, between 8 and 9 here since March. So 850, you're just sticking out in the middle. Maybe if you're holding out on a long here, maybe wait for the higher end of the range, lower end of the range. $8, and that's just above the all-time low.
I was just looking here. Fitbit too is often one that we talk about that they kind of move together. Fitbit's getting back down towards the lows here too. What do you think about a Fitbit bounce of $5?
I mean, it's possible. Someone made a big stand there a couple weeks ago. He got a little bit of a bounce. It's still lifting. Once again, very, very uninteresting chart. 5 got a rally towards 6. Now hanging out just above there. Low, all-time low 490. Look for a print there and just kind of skipping from these stocks. You know what stock got a boost? Finally got over 5 and got a little bit of a boost. We talk about that $5 level.
What?
Your J.C. Penney back up at 556 now.
It's hot.
Yeah.
It's hot all of a sudden. Taking off. J.C. Penney blast off. The retailers, we've been talking about it though. The retailers have come back a lot. Nothing more than Dillard's. I mean, Dillard's is an absolute monster. Goes from 55 to 78 in the last 10 trading sessions. But you look at them all. Macy's, we talked about this on Friday. Kohl's is right up. It's bounced about 10% in the last week and a half. JWN was already up, but a lot of the ones that have really been beat up. Even look at a Gap GPS. It's come off the lows. It was 21, now it's 24. Abercrombie and Fitch was left for dead under $9. It's almost 10. So a lot of these retailers have come back here. Target and Walmart have bounced back big time too. I mean, they got killed on the news that when Costco got killed, that Amazon was going to come in to the grocery market when they bought Whole Foods. Well, Target's got all those losses back. Target's all the way back. Walmart is actually right approaching its highs for the year. 52-week highs it's not far off of. So, a lot of these retailers have come back substantially from the lows.
And how many times have we seen this scenario? You know, ahead of the earnings, they report a little bit in the earnings season. They kind of, you know, drift higher, and then boom, they starts out with the Macy's report. That comes out, they hit that. Maybe you'll get something a little bit different this time. Just looking at the recent high of the moves, what a nice run from 76 to 80 in Walmart. High of the move was 80.47. So I'll just give you, since we've been moving up, I'll give you some resistance levels in all of these stocks. Target, $56. That's filling a gap from earnings. Doesn't look like you have anything major until you get closer to $58.
58's huge.
Yep. Macy's on the comeback here. Let's see if we can. A couple peaks above 24, and then they beat it right back down. So we'll keep an eye at the $24 level here in Macy's. And then I think the Kohl's chart jumped out to me as well. 42, if you want a number in 42. Dennis,
big number.
You got any institutional size there? Because you stuck up there in May, and now you're approaching it now. You see anything at 42? Or is that too far away?
14,000.
Is that enough? That's not really very much, huh?
It's early though, so the book could fill up a little bit more, but it jumps out. I'm looking at all the levels as 100 shares, 200 shares, and then boom, 42 is 14,000. So there is a little bit, and that's in the NYOB book, so the New York Stock Exchange Primary Markets book. So it's something. You know, I don't know if that's a stopper or not, but, you know, that might be. It's showing you that somebody's got a bit of a piece to go there.
Foot Locker, mentioned by John Dotson here, too. This stock left for dead, made that 44.
It hasn't come back.
59. Yeah, exactly. And, man, this thing got whooped after earnings here. 44.59. That was the low of the move. And if you were, I think I remember looking at this one. If you were looking at the former low of the move when you had a gap down day, when you hit 44.87, you were using that as a target on the downside. Went to 44.59 and then rebounded, trading up 8 cents in the pre-market of 46.18. But keep an eye right at 47.40. Last two highs, 734, 747. If you're looking for some continued upside in Foot Locker, and since
that got Amazon too, though.
Everything.
That was the one, remember, because Nike, they were saying Nike was going to sell some shoes on Amazon, and obviously Nike sells a lot of their shoes in Foot Locker, so that was the big fall that we saw a week and a half ago. So, you know, it's just like Amazon goes through and just, you know, basically they're just beating on everybody, like they're like the schoolyard bully. They're just going out there and they're just eventually beating on everyone.
Everything?
Eventually they're going to be every single sector. It's going to be everything Amazon. Like, you got to think, I still think they're going to hit the pharmacy market here eventually. If they're going to go groceries, why not go pharmacy? And, you know, what else they could, you know, maybe they hit, you know, they're just going to go everywhere. They're just the schoolyard bully. But is this overdone is my question. You know, is it like, you know, okay, well, Amazon might compete with you here.
Yes, did we lose you?
Overdone.
Okay. Dennis?
Oh, did you lose me again?
All right, we're back now. Something with your headset. I'm not sure what's going on, but
yeah, it's definitely my headset.
Okay.
I'm just trying, you know, to fix it. Or it's the ports. I've tried a couple different ports, so apologies. Obviously, I've got headset issues here this morning. I might have to go buy a new one, but
oh my gosh, that would be a capital expenditure. But Amazon. Amazon, can we just talk about that on Friday a little bit? This one, if you're focusing on your pre-market lows and you're using that for levels in the session, that's what we try and talk to you about here on this show. Pre-market low, 1001.80. Off the open, they hit it. Everyone that was holding out for $1,000, they were shut out. Hit 1001 and then rebounded. Trading up just $1 here, so that was a nice rebound off the low. You got to imagine it had, you know, from the all-time high that was made on Thursday at 1083.31. So you had an 82-point sell-off. This is easy, 41. That fills the gap from pre-earnings at 1040.80. So important for Amazon. Let's see if we can get a 50% retracement off this 1100 level.
Okay, apologies again. I think it's my headset. So I'm actually probably we have our guest coming on at 8:35, so I might just let you guys go at that point in
Okay.
time because my headset is just not working well enough, and I'm destroying the show with my bad audio here. I'll give you a quick imbalance look. Hopefully you can hear me.
Yep.
Coca-Cola 105,000 to sell. This is actually just hot off the press here. These numbers coming out. Baba is up every morning. I'm telling you, this is a trade to sell the close and buy the or to buy the open and sell or to buy the close and sell the open on Baba because it seems like every day Alibaba is up. $158.89 this morning. It's got 24,000 shares to buy. Square SQ, which has been hot as well, 75,000 to buy in Square. That's pretty much all that's jumping out at me, though. It's pretty early.
All right, let's see here. Newbie in the chat. Thoughts on GE, General Electric, in the 25.5 area, Dennis? I mean, this one, I know you own it for the dividend here. Are you just getting tired of this thing now? I mean, what a haircut from 29.5 down to 25, 26, trying to put a bottom in. I mean, what's going to turn this thing around?
It's out of favor. I mean, this is just what happens. Stocks get out of favor, and they're out of favor for a long time. It's been out of favor since Deutsche Bank said that they might cut the dividend. So we've made fun of Deutsche Bank a lot, but that's still overhanging, and there was other people talking about it too. 3.75%. I hope they don't cut the dividend. That's the main reason I own the stock. So if they ever were to do that, it's going to have a lot of sellers, and I might even be one of them. So anyways, I've had this in my portfolio for 15 years or something, 17 years. I'm sticking with it, but 3.75% dividend I like. Like I said, I've probably got the dividends, have made up for all the money that I will probably, well, I'm not down very far, and I'm down 3 or 4 points, I think. But in 17 years, you lose 3 points on something, it doesn't impress you. But like I said, the dividends I was collecting the whole time, I probably have all my investment money back out of it just in dividends.
Just to keep it, I mean, this is the long time going back on the charts here. You had a gap up, and this was basically on the weekly charts, and that's when they, what did they do? Was it the $5? I can't even remember. That was so long ago, Dennis. What
gap are you looking at?
This was the gap back from September of 2015. I don't know.
That was the $50 billion.
Right, that's right, and we thought.
And that's when I said they should have did a special dividend because I would have rather had a special dividend than a buyback because they always buy these stocks back at the highs. They're not very good at it. Is the problem? That's why I don't like buybacks because the companies just seem to do them at the wrong times.
Yeah, that took you into the 25.5 area. Basis the weeklies, you're coming down there, so you basically got a gap fill if you've been waiting there. I mean, you like the dividend, you got a little bit of a downside protection, but man, oh man, I just, what's the catalyst? Who's going to come up and upgrade this? I mean, maybe I'd be interested, maybe if they do cut the dividend and you just have some horrible, horrible day and maybe get a washout low, then, then maybe that's something to look at. But right now, General Electric, we're trading up 4 cents. I'll just give you some daily levels. The low of the move, and there were several lows there at 25.26. That was flanked by 3 other lows, 25. I mean, just building all kind of support here. But it did the same thing at 28. Then it did the same thing at 27. Then it did the same thing at 26. So 25.20, the low of the move.
I want to jump in real quick with some comments we got from a FireEye spokesperson on the reported hack that we discussed earlier. It was actually of a subsidiary of theirs, Mandiant. The spokesperson told Benzinga that they're aware of the report, but thus far they have found no evidence that FireEye or Mandiant systems were compromised. So if you're watching this trade this morning, keep that in mind.
All right, 8:35. We got a guest coming up here, huh?
We do have a guest. We're going to go to him right now. Kirk Du Plessis. He's the founder and head trader at Option Alpha. So we'll be right back with Kirk Du Plessis.
Back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick and Spencer Israel, and we have Kirk Du Plessis on the line. He's the founder and head trader at Option Alpha. Kirk, how you doing today?
Good. Third time or something, so
yeah.
Third time from hopefully.
Yeah, we'd like to hear your option strategies. I know you were waiting for a little bit of volatility to kick up, and it just seems like it's just really brief. You know, you get those quick sell-offs that you had on Thursday.
They're shooting stars, you know. They're there for a minute and then they're gone.
Yeah, so how do you prepare for things like that? I mean, are you a VIX trader at all? More keeping an eye on individual issues and see how they react to the volatility in the market?
Yeah, I think the VIX is low, so I haven't traded the VIX in a while, but I like trading it short, so I only trade the pops. I'll trade it bearish and, you know, try to trade the move back lower. But I think actually that, you know, like this earnings season's been much better than, you know, previous. A lot of securities and big name companies, you know, have much better implied volatility heading into this earnings season. So I think that that's actually been a better opportunity, is trading some of these earnings positions.
Okay. All right. Let's take a look at Facebook here. That reported another good report. They said, you know, a little bit about, you know, I don't know if we're going to be able to keep up this ad revenue, ad growth. Interesting day on earnings day. Got really extended here in the pre-market, and I mean, I guess unless you're just a big institutional seller in the pre-market and the after hours, just saying, you know, these are just ridiculous prices, you wouldn't have got anything. But sold off the open along with the rest of the market. Now they suck a lot of the premium out of the options. How are you evaluating Facebook here after the earnings, trading up real close to that all-time closing high? I believe it's 172.48.
Yeah, it's like 175.5 or so is what. Yeah, they got slammed on the day of their earnings, but, you know, kind of came back strong on Friday. You know, I think Facebook is still, you know, a company that people want to be invested in, like, generally, right? And, you know, I don't know, like, nor do I care too much about, like, you know, the fundamentals of the company. I just think that it's probably a company that people are still going to buy, and it, you know, still on a pretty good uptrend right now. So what I like in Facebook is just like a simple put credit spread. So just in my case, I was looking at Facebook, the September monthlies, which are 46 days out. I was going to sell the 165s and buy the 155s. On the put side. And so it takes, you know, brings in about $150 of credit. You know, we'll see where the market opens up, obviously, but I think it's a pretty good trade. You know, if Facebook trades all the way back down to 165, I don't know if it'll go that much lower, you know, from these levels.
Yeah, you got a lot of people stock, so you're bringing in the premium, so you're bringing in $1.50 on a $5 spread there, huh? So
yeah.
How do you handle? I mean, I listen to Nick Shaheen, I listen to, you know, Peter Goldstein and stuff, and, you know, these things, it sounds, you know, so easy, you know, on paper and stuff, but, you know, how do you handle the risk in that? I mean, definitely the risk-reward ratio. I mean, if it got, you know, where would you cover? Let's say it goes against you.
Yeah, I mean, you know, like my thing is, you know, like, because we've back tested so much of this that, you know, like stop losses in trades like this end up getting hit more often than not, right? So if we had a stop loss and we said, okay, let's say we take in $1.50 and we've got a stop loss at 190, there's probably a good chance that it's going to get hit just, you know, based on the fluctuations in the market. And so the 165 strikes have about a 30% chance of going in the money. So there's about a 70% chance that Facebook stays above that level, at least, you know, based on pricing on Friday because the market's not open. So for me, I think it's actually a fair risk reward. I mean, we're taking in, you know, $1.50 and, you know, about a 30% chance of losing. I mean, like, that's a pretty even risk reward based on the probability. So for me, I just let this thing go and try to take money off the table early. And if not, if it goes against us, you know, then we could, you know, get into another position in October or whatever the case is. But I'll just keep my position size small as always. You know, it's a bet. It's a trade that we got to make. And yeah. So no stop loss.
And it just every day that it goes nowhere is a victory for Kirk and
his
traders.
Yeah,
right?
yeah. And I think a lot of companies, like you said, like, you know, you've seen a lot of companies, you know, like AKAM and Starbucks. I mean, all these companies are opening, you know, from earnings, and then they're all over the place. And so I think that's just going to be, you know, kind of how it is. Like, Facebook's implied volatility, while it's not as great as it was during the actual earnings event, is still pretty high. Like it's pretty decent compared to a lot of other ETFs and opportunities out there. And so now we're past that earnings event. Now it's kind of like there's nothing on the horizon that could surprise us per se. So I like the trade. I like the idea.
How about Starbucks? You mentioned it there. What fluctuations ahead of the report? They came out with some news. They popped it, and then they slam it on earnings here. 54 looks like a good, long-term level. We bounced off that a couple times. After that kind of volatility, are you more apt to let this one settle down for a few days, or you're looking for some strategies in Starbucks?
Yeah, so I like, if I'm ever going to do anything after earnings, I want to see a couple days of where it goes first, right? So, because it could take a couple days to settle into it. The thing with Starbucks is if I know like a lot of people dig into their earnings were mostly just like their really bad acquisition of that tea company that basically just flopped, right? So like the actual growth in the company, I think was still good. I think it was like 5% growth, international, 6% domestically. So not that makes a big difference, but in this case with Starbucks, I think people maybe are looking at the wrong thing. And if they turn around and start looking at, Starbucks versus the acquisition, which of course is part of it and it, affects earnings, but they take that out, it's actually okay. And so I don't think it's going to fall too much more, from here. I think they got slammed for sure, and they should have, bad acquisition, but I don't know if it's going to, continue to move down into the low 50s or even the 40s.
All right, let's move over to the oil market here. And, man, this thing is, it's trending. It goes, 4, 5, 6, 7 days one way and 3, 4, 5 days the other way. You got a nice uptrend. I mean, I don't know how many analysts and how many articles I've read over the last 2 or 3 months that, they're convinced oil's going back to $60. And, you see it trading at 49, 45. It seems like a long, long ways away. But how are you looking at it? How are you looking at the oil market?
I think oil is crazy because we've had this same move like 6 times in the last year. I mean, like it's been like the same magnitude, the same, like roughly same number of days. So, I mean, I think it's all fluctuations, like trying to find a price. Obviously, the big drag has, been the dollar for oil because that's, been a big move lower. But I think that oil, at least short term, is a little bit overbought. I think it's probably reaching a level now at around 50 that you could probably, short this thing. I mean, that's what we did on Friday, actually. So we went short oil via USO on Friday. We did a put debit spread. And I think it's just a short-term play. I don't, if it goes to 60 in the next 6 months, whatever. I don't care. But I think short-term, it's probably a little bit overbought. And so I like oil a little bit lower.
Do you play the USO? You play the crude oil? I know that. Okay, so the USO.
Yeah, we played USO. In this case, we played USO. Yeah, we played USO on Friday.
Okay, so man, it's kind of it's a lower price thing. Do you how far out do you have to go to get some decent premiums in that one?
Yeah, so in that case, we bought a debit spread. So we bought the 11 puts and then sold the 9 puts. And I like that trade because, and I was talking about it the other day with our members, is because the break-even price on that trade was practically right where USO is trading right now, like 117, 1015, 1017. And so the break even on that trade was right where the stock is trading, which I like. Then I know like exactly where it's got to move. But the risk reward was unbalanced in pricing. So even though we had probably a 50-50 shot on this trade, right? We're going to get paid 120 or like 220 if we win, and we'll lose like $180 if we lose, right? So like 50-50 shot of, making it, but our risk reward is a little bit slanted in our favor. And so I think that's, I like those trades, where the risk reward is, fair or even or a little bit slanted in our favor. It's not like a huge anomaly or anything, but it's, a little bit better, probability of success.
I think of all the option traders that I've talked to and about the different strategies, I mean, putting in the percentage of probability, factoring that into the risk reward ratio kind of gives you a different picture.
I think so.
Yeah, it really does.
Yeah, I think if you, I don't know where oil's going to go, right? I just think it's overbought, right? But it could definitely continue to move higher from here. So, but if I take this type of trade over and over and over again, even if I'm 50-50 winners and losers, so I'm really bad at picking direction half the time, I still should win because I make more money than I win than if I lose, on the trade. So I like those types of trades where the, the actual risk reward is tilted in our favor.
All right, so let's talk. We've talked about stocks, after earnings, but we got a couple huge reports this week. Tuesday after the close, Apple's going to report a little bit of volatility.
No doubt.
Is this something that you just, you're just going to, I can lay off Monday, I can lay off Tuesday, you let everyone play their games, pop up the premiums, and then jump in after the report? Or is there some way you like to play Apple ahead of the report?
Yeah, I like to play them all ahead of the report. So, I mean, like Facebook is interesting because it had high implied volatility heading into the report, and then after it still remained pretty high, right? And usually it gets crushed. But I like Apple, and Tesla, all of these ones this week, heading into it. I mean, super high volatility. Everyone's pumping up the premiums. It's no different than Google, which we played last week. Google had really high implied volatility and didn't move as much as, everyone expected. So I think Apple's going to be pretty much the same. I expect it to be over the long term, but I think they're pricing in probably about a $5.50 move maybe when it's all said and done on Tuesday. But I think it's good. I think the premium's decent there. You can get, far outside of the expected move. So I like doing, in this case with Apple, it's $150 stock. So the margin's kind of heavy to cover to do something naked. But I would do like an iron condor or an iron butterfly with really wide wings to take in a big credit.
Okay. All right. And Tesla, they had the Model 3 party, I believe, on Friday night. And woohoo, 30 cars being delivered. That's if that doesn't knock your socks off. How about,
I know, right?
How about 31? But you know what? A lot of people are not valuing this as a car company.
Nobody's valuing it as a company. That's the reality.
But do you let that interfere with your overall trading strategies when you're looking at a stock like this?
Yeah, I think the fear with Tesla is that everyone wakes up and realizes how overvalued it is, based on growth. So I think that's the fear. But I still think Tesla's like a Facebook. Everyone loves the story, and until they don't love the story, I think they're going to be, in love with the stock. But I think Tesla will move for sure. I mean, it's gone from, I think the high recently was like 386 down to 300 in like 5 days. I mean, it's going to move for sure. So with Tesla, I think you go wider, you give yourself a bigger net to catch the stock on earnings. But I still like playing the earnings on this. I think you have to. Implied volatility is too high to not do something with it.
All right, and just moving over here to the overall market. All-time closing high in the S&P's 74 even. Here we are trading right there, 74.5. Actually, a decent range overnight through the biggest reports in the earnings season here. And any thoughts on the overall market?
Yeah, I mean, I think it's still elevated. I think I've said this every time I come on, but it could always go higher, right? Like, I'm not naive enough to think that, it's always the top. But I think, until the Fed actually does tighten, instead of just like wink and hint about tightening, we'll keep on this trajectory, just keep, slowly grinding, higher, a little bit of sell off here and there just to keep everyone in check. But I still think we grind higher here.
All right. And I just want to ask you just about one more stock here. Always a big news stock, Twitter. Got,
Twitter.
5 out of the last 6 quarters, rallied up into the boards and then gets knocked back down. Barron's calling for single digits. I mean, have you ever seen a company with a product that so many people use and the stock underperforms?
Yeah, it's crazy. I really think Twitter eventually is a buyout candidate for somebody. I have no idea who would buy it out, but I think you just have to, or somebody would have to walk in here and say it's too big, too influential. They're just not monetizing it the right way, and try to buy them out. But I don't know. Their earnings and their growth is they're not doing it organically, and so they maybe have to look someplace else.
Yeah, I mean, look what Square has done, and that stock hitting all-time highs, and same guy at the helm, not great results. Kirk Du Plessis, founder and head trader of Options Alpha, joining you here on Benzinga's Pre-Market Prep. Great talking to you, Kirk, and we'll track you down again in the next couple months.
Sounds good. Thanks, guys. All
right. 849 here. S&P futures, as I mentioned, hanging up near the highs of the session, up 4.5 points. 2474.75. Dennis, we We got rid of Dennis. We
got rid of. We don't need that. We don't need
We
Dennis.
couldn't take that audio
We got rid of
anymore
him.
here. So, Spencer.
But I want to mention actually on the heels of that Twitter discussion. So that was actually mentioned in Barron's over the weekend too, right? They were talking about relief for Twitter, and they said a buyout just seems so unlikely at this point. Who would buy them out? But that was an interesting article there from I think Jack Huff. There he just outlining his take on Twitter and just how there's just really no relief in sight. They have to get cheaper or get better, which obvious to say, but no relief in sight for Twitter. All right,
What about the $99 premium ad service, Spencer?
Oh, are you going to sign up for that?
Did you sign up for that?
I didn't sign up for that. I'm not going to sign up. It's $99 a year, and you get your tweets auto promoted essentially. But I won't be doing that. But we'll see if that's the thing that brands do. If brands want to get their tweets promoted, people obviously pay to advertise on Twitter. We'll see if that can help them. But I want to stick with the Barron's theme there for a minute. A couple of stocks mentioned over the weekend in Barron's. Citigroup could rise by 50%. Citi, of course, had their first investor day in about 10 years last week. I think it was 10 years last week. And Wall Street liked it, and Barron's liked it too.
Wow, 40%. I mean, it's hard to conceptualize an upside in a bank here. Certainly going to need higher interest rates for that to happen. This has been, you look at these stocks here, we'll go over some of these other financials. This one, it really did not sell off when the others did. You got some major resistance. We're trading up 40 cents at 67.83, which is a decent move here. Had the gap after earnings, but just doesn't want to go down there. Let's pick a level on the upside here, and we have the high of the move at 68.91. Then multiple highs in the upper 68 handle, 873, 876, 884, and 882 at the end of last week. So big seller, 69. You can see that. So until we get there through that, that's your resistance. You have to respect that. Coming back on the downside here. Trying to fill the gap. 67 was the low, and you gapped up in earnings here from 66.43. So trying to fill the gap, but Barron's gives it a little boost. I don't know what they said with their timetable on the 40% upside, but it's going to take a long time for that to happen.
It was 50% upside, and I don't know what they said as far as timetable. Maybe, no, I don't know.
End of the year?
I don't know. Well, you'll have to read Barron's to find out. Another one getting positive ink over the weekend there. Honeywell, HON, could return about a total of 15% in the next year. They're looking for profits to grow and the P/E ratio to rise. So Honeywell, under the new CEO they just got.
All right, Honeywell, you hit an all-time high at 138.70. Ended the week at 136.79. Not reacting a lot to the Barron's article as of yet. No, it is. It's up a buck at 137.80, a $1.01 to be exact. Let's just keep an eye, folks. All-time high. That was double top at 38.69 and 38.70. Only a buck away from there. That's really the only level you have to lean on in Honeywell.
Last one from Barron's. Advanced Auto Parts, AAP, is on the road to recovery, according to Barron's as well. This is a cheap one. So Barron's says as long as this guy can show it can hold its own against online competitors, it could rally as much as 30% in the next 2 years.
Have you ever bought anything at Advanced Auto Parts?
I have, yeah.
Oh, really?
Yeah, I've been.
You work on
there.
your car and stuff? And
I've bought, those new windshield wiper.
Purchase. You got an initial pop, right at 4 o'clock or little bit. No, actually not too long ago. You hit 115, but you found sellers here, and you're back down at 113.84. This is a pretty thin stock, so it's probably not up on much volume. A couple thousand shares have traded. Big level to keep an eye on here, and we have taken it out. 111.70. That was the high of the day after that earnings report that took it down to the low of the move, and then man, they protected it a couple times. 99.13. You had three other prints in double digits. 998, 995, 998, 99.81. So little ways away from that, but man, it looks like it's trying to fill the gap. I would kind of wait for, well, 111.19 if I really had to own this thing. That would fill the gap from Friday's session. Two closes in the mid 110 or lower 110 handle, 110.34, 110.21.
We got to talk about Sprint here. A report from the Journal saying that Sprint proposed a merger with Charter Communications. And then last night, Charter said in a statement reported by Dow Jones that they're not interested in acquiring Sprint. Sprint is, of course, still on the table with regard to a T-Mobile merger. So Sprint, and they did close up, I believe, on Friday by a hair. What are they doing today?
You got to pop off that news. You got up over 870, 874. And you've had just a couple highs above 880 to 9. So I'll just look at it from a technical perspective. $9 in major resistance. Of course, if a deal comes across, it just seems like there's so much talking about a deal. There's probably not going to be a deal. That's just, if there's smoke, there's fire. But on this one, it just doesn't look. It gets the pops and the drops. Be more interested to see if it can hold $8. You had 5-6 lows in a row right at the end. 810 area. That low of the move was 82, so 802. So you've been in a trading range between 8 and 9 since the middle of July, and now coming back towards the lower end of that trading range. Diana Dawn is asking about the move Friday in Fred, and honestly, I didn't see the move. Was there any news associated with that move in Fred?
Nope, not that I'm seeing.
Okay, here's the stock that's gotten, man, it popped over $20. That was when they thought they were going to be a beneficiary of the Rite Aid Walgreens deal, and it turned out not to be a beneficiary. Just hanging out here near the lows of the move. You made a low at 610, up 4 cents today, but man, break above $7 here. A couple highs just above 7, so more inclined to be a buyer here over 7 as opposed to shorting it. A lot of air here between $7 and $9, but not seeing any news associated with the move. Closed near the highs of the session. You don't have gaps to really about here. So if Dennis was still on the show, you'd say, maybe get a 2-day moves here in Fred's Inc. A.
All right, not a lot of big earnings today. The one that's notable after the bell is Pandora. We're looking for a 24-cent loss on the EPS and about $370 million in revenue for the quarter in Pandora.
Who's getting involved? Sirius Satellite, and then was it BlackRock or somebody? Some big fishes have been delving in this one. I think from the upside, you absolutely have to clear $10 in this issue. Well, not sure what you're going to do in the report, but big seller at the point. 4 out of the last 5 highs between 888 and 998, 965 high on yesterday, trading up 18 cents here in the pre-market, $10. Absolutely huge resistance level in Pandora. Do you listen to Pandora, Spencer? Do you have a Pandora account?
I do. Well, I have a free account.
Free? They're free. Okay.
That's the problem, is everyone has free accounts like me. I want to run through the ratings list one last time. We covered most of them. Celgene upgraded at Argus this morning from hold to a buy. We talked about GoPro. ADP upgraded. Baidu upgraded to buy at Nomura. Wells Fargo upgraded at BMO to a neutral, and nothing else jumps out to me. And then as far as downgrades go, Ulta downgraded by Oppenheimer, Hertz downgraded at Barclays, Citigroup downgraded at BMO, and Facebook, we talked about that pivotal research note there this morning, and those are the only real ratings changes that I'm seeing.
Let's wrap up today's show with a couple comments on a couple stocks coming out of the chat. Johan Smith is asking about lumber liquidators and 3065, that recovered back. We all know the story with lumber liquidators. Hit 30.65. Major pullback. Found support at $24 area. But if you are trading, let's see if there's any news or any pre-market action here. Trading up 42 cents. But, man, look at this daily chart if you're trading this, Johann Smith. You had highs between, let's just call it 26.50. Major resistance. You can see all the highs June 19th, 20, 21, 22, 23, all in that 26.50 area. So looks like trying to get some momentum here and get back up to that 30.65 high. What do I think about AT&T? I wish I wouldn't have been on vacation. I wish I would have bought it at $36. One of those whole numbers held. Boom. Keep an eye. Friday it made a new high of the move and then kind of had a little bit of a red dog reversal because we came back down flat at 39 even. I mean, let's get above 39.67, the high from Friday, to continue this move higher. If not, you'd have to think there would be some backing and filling here, but a lot of people stuck short this one. Keep an eye on yesterday's low, not getting much of a bounce. 39 even closed, 38.83. That was the low from Friday. Spencer, what's on the docket for Tuesday?
Yeah, well, that's the big one is, of course, Apple after the bell, but we're going to have Nick Shaheen, as we do every Tuesday, join us to talk about the options plays, and also we're going to be joined by Peter Ghosteen, a technical trader. So he can share with us some of his charts. So that's on the docket for tomorrow. Hope you enjoyed our show today. I do apologize for anybody who experienced technical difficulties. We'll have them worked out for tomorrow's show, but we'll let you go now. Have a good rest of your day. We'll be back with you guys tomorrow.